Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Duquette will take us through the charts. And here to take us through the trades, we've got Mike Shore, Director of Trading Education, Prosper Trading Academy. It's great to see both of you. All right, Mike, let's start out with the first trade on your list. You've got Instacart, which is under the umbrella of Maple Bear. Instacart's been an outperformer year to date compared to the S&P 500. What's your view here?
Yeah, and I'm seeing the same thing technically that, we're coming up to a little bit of resistance here, but hey, if we can push this and if we can push these recent highs, I think we have a lot more room to the upside. I just think that the American consumer is just kind of entrenched into their way of doing things, and I continue to love this stock.
It's habits. You make a good point, because every time I delete Instacart off my phone, I find myself adding it back, and I'm at another cycle where I'm probably going to delete it, but then, a need pops up. All right, so Rick, take us through the patterns you're paying attention to when it comes to the chart.
Yes, brushing up against a notable resistance area is probably the first thing many traders would notice about this chart. What that means is we had our 52-week highs here, just above 53. Then we had a big gap downward on earnings here. This red line represents the low point that we saw before the gap down near 47.53. That's about where price has brushed up against two times within the past few weeks here, but so far has not yet made a convincing push above that level. RSI, our measure of momentum, is still making some upside progress, so momentum still does favor the bulls in this case here. Notice as well that price is still above our trend line and still above all three of our moving averages, which continue to diverge farther and farther apart from each other. The faster 21-day, the medium 63-day, the slower 252-day. The faster ones are pulling away from the slower ones, which suggests the trend is still favoring the bulls, as I said. So if we were to look at our standard deviation channels and volume profile study, we can see that price is quite close to our linear regression line. That's our solid blue line here, our line of best fit based on closing prices. Some traders use that as a measure of fair value, as an idea of where price should be. So that comes in right around 46.76. If we do manage to push to the upside, the +1 standard deviation channel comes in near 52. That could be a further resistance area to watch. But to the downside, volume node, our green line represents a frequent stopping point for price. That's near the 42 level. That could be a significant downside area.
Okay, and then Mike, I'm going to send it back to you. Tell us a little bit more about your trade here. What's the approach?
Yeah, we're seeing the same thing now. Implied volatility is relatively low. Across the board, and which tells me that the market's not fearing this. So I'm actually, my breakout price is 47.70, about 17 cents away from Rick's. But then to the upside, still looking. I believe that he noted 52. I'm just targeting 51 on this call calendar. So, pardon me. A June 6th versus June 20th 51 call calendar.
Okay. All right. So, Mike, let's move on to your next trade. Next up on your list, you've got Roku. That's underperformed the S&P 500 year to date. First of all, well, do you need to take a break? We can take a look at the chart first if you need to take a quick break.
No.
Okay. All right. So let's talk about Roku. What's your thesis here?
So this is one that it just cannot get above that resistance level, and typically for whatever reason, if the market does turn down, Roku tends to outperform to the downside, and so throwing in a little bit of something for the bears as well as the bulls today, I think that we've kind of topped out here. So the same sort of play that I want to play to the downside.
Okay, all right. So, Rick, let's pull up the chart for Roku and tell us the patterns that you're paying attention to.
Well, this one, by some measures, for some people, probably a big disappointment, but for others, a big relief perhaps here. Why the reason I say that is because we have given up pretty much all the gains we made during this strong push to the upside here. We topped out near 104, so that's the more disappointing part. Maybe the relief part is that at least for the bulls, price held on near this 53 level. If you look back here, it represents some significant low areas in terms of closing prices. But for now, we have broken through this rather steeper downward sloping trend line, giving way to a more moderately sloping upward trend line in white here. Notice that our moving averages in the last chart we were looking at, they were diverging farther apart from each other and trending upward. These moving averages are clustering together and moving sideways. That speaks to lack of clear trend direction, weak directionality. It can be either that the price is so choppy that it's difficult to pick a direction, or it's so range bound that they're just flat. In this case, we've seen some big swings, but also kind of moderating sideways behavior. RSI approaching the 50 midline here, that represents a shift from bearish momentum. So if we do start to break below our 21-day EMA that comes in near 67.50 and then break below that trend line, look for RSI to follow suit and generate the bearish signal as well. So now when we assess our volume study here, we can see the point of control is at these low levels here. The heavy trading area comes in at 57.64. It also lines up with the -2 standard deviation channel. So there could be a significant support at that area here. But for now, price needs to work its way out of this congestion zone near the 69.70 level. To the upside, then volume picks up again near 76, and ultimately we have these highs near 82. And I do want to just show a 5-year chart as well, just speaking to the very severe decline we saw in this name here. Where heavy volume, heavy trading at these lows, but so far not really much upside progress. 109 on a longer term chart, double top type area, that's a mark to beat.
Okay, and then Mike, so tell us a little bit more about your trade here, your approach with Roku.
Yeah, just playing off of its inability to make higher highs, and so I'm just going to play a 60-65 put spread, straight put spread. That if things don't materialize, I'm targeting that 60 line above where Rick's 57 support was.
Okay, all right, let's talk about the final trade on your list. You've got a member of the Mag 7, that's Amazon. Look, Amazon under some pressure like the broader market, but it has made quite the recovery over this past month. What's your view here?
Yeah, the same thing that, in general, I continue to be bullish. And so when the markets are depressed, that you get your buying list out, and I'm looking at Amazon. That I think that that a lot of the tariff stuff, we've seen it all go through, bluster one way, bluster the other way, and then suddenly a deal gets done. And I think this is just a value play. I would over the next few weeks, I think that we do see an upward trajectory because of all of that, and Amazon is poised. It's sitting right there at its 200-day moving average, and if things work out, then I really like the upside in Amazon.
Okay, all right. You may have heard some of the noise happening on the floor. It gets rambunctious down here on a Friday heading into a 3-day weekend. Mike, I was going to say, I'm sure you're familiar with it. You start hearing the whoops and whatnot. I won't call it animal spirits because that's not what's happening right now. But Rick, take us through what the patterns you're paying attention to when it comes to the chart for Amazon.
So this chart pattern is something that many people are on the lookout for constantly. And what I mean by that is we had a large gap up here. Our price activity had a big push to the upside, but then we've started to kind of fade downward here, kind of forming this triangular shape. So this is what's known as a setup called a bull pennant type pattern here, where you have something changes, earnings, some kind of fundamental change that drives prices upwards. People take profits, people consolidate a little bit, then it retreats back to a supportive area. Then the hope is that price will once again push to the upside and take out those previous highs. So this is kind of showing that type of behavior. It's also hitting significant support. All three of our moving averages and our short-term trend line are coming together near kind of like 195, 198, around that general area here. If you're looking for very exact numbers, sometimes it doesn't really work out that way. Just a supportive zone in this general area is kind of the point that stands out here. And many traders would then be looking for it to take out this 216 level. You can see here high point, low point after a gap, low point, breakdown point, and then that's roughly where we got stuck during our last climb. So now if we were to look at volume profile once again here, we can see that we are in a heavier volume area right about where we are now, adding further emphasis to this as a supportive level. If we were to break downward, point of control comes in near 187.70 or so, and then to the upside, we would have the +1 standard deviation channel lining up with a volume node near about 230 or so.
Okay, Mike, yield the floor back to you for more details on your trade approach here when it comes to Amazon.
Yeah, I think that we're looking at the same charts, and so I'm targeting a little bit below where Rick said. I'm looking at the 207.5, 215 call spread for June, and you can buy that right now for about $2.20. And if that plays out at 217 or above, you're looking at 2.41 at least reward to risk. I think you can probably buy it a little bit cheaper than that right now.
All right, Mike, that's the last on your list. Amazon there, looking for some momentum there. That's Mike Shore, Prosper Trading Academy, and our very own Rick Ducat, the Duke of Data. Thank you both.